it's Katie with First Source, and we're excited to be back on our People with Purpose podcast with Love Living Local 315. I have Amanda with me today, and we're going to talk about the importance of youth accounts. A lot of times, obviously, parents have their own bank accounts. They have their savings, their checking, their loans, all their things, but they don't necessarily plan for their kids, and they don't have those accounts started maybe as early as they should, or they just put money aside for their kids in their own accounts. And we're going to talk a little bit about today why maybe that's not as good of an idea, and it really is important for kids to have their own accounts. So, Amanda, let's just start with what is the reason, the main reason, why is it important for kids to have their own accounts?
As a credit union, we are very into educating our members, and we want to start educating them from as early as possible. So it's important for them to be comfortable with coming into the financial institution, getting to know the people there, seeing familiar faces, and being comfortable with asking questions when it comes to their banking, their money. We have kids come in that are very excited to start opening their accounts. They know that there are fun things that they can do within the credit union with opening their own accounts. So it's really about the financial education and the importance of starting them off at an early age and just allowing them to learn as they continue to save.
I think that is one of the most important things. In other generations, money was a little bit taboo or it wasn't talked about. And now I think people are more open and willing to talk about finances and talk about money. And they want to learn. They're vying for that information to understand how to best afford their life. And kids get excited, right? They get birthday money or they get holiday money. And it's like, what do I do with that now? So talk a little bit about First Source. I know we have specific youth accounts. So what is exciting for the kids?
So we have our Penny Passport. Those accounts are for kids up to 12 years old. They can deposit funds into their account for every $5. They earn a stamp on a little penny passport. Very cute. Up to $25 deposit a day. And their stamps, they can then redeem for different prices. So we work with a lot of different local places. They can earn gift cards to movie theaters, to bowling alleys, to go out and grab ice cream or pizza. So there's a lot of fun things that they can do just by saving money in their account and earning those stamps. We also offer our Penny University program. So those are accounts for 13 to 17-year-olds. And with those programs, they can go on through our website, through our bonsai program, and they earn prizes there as well.
I love that because you should be rewarded for saving money, right? We want to teach at an early age why it's important to set those funds aside. So it's great that the kids can get excited and that they can get rewarded. And just like any other account, they are earning dividends. So they're still getting money for having their money there. I think one of the cool things that we offer is our term share certificates, which are like a bank's CD or certificate of deposit. And obviously those earn higher interest rates and rates of return. What a lot of parents don't do that I think is a great idea and they should start doing more of is if the child has money in their savings account that they're not going to spend. I think about when my son, was firstborn, even through, 6, 7, 8 years old, he's not going out and spending that money, right? We're still buying things for him, little things here and there to teach him the value of money. But mostly if there is something bigger, like a birthday present or a holiday present or things of that nature, he, wins a prize, whatever that is, take that money and put that in that term share certificate, earn that higher rate of dividend. He's not touching it. It's just sitting there. And now his money is growing and earning more. So, that's something that I like to talk about with our members and our parents.
Absolutely. So my teenage daughter started one of those with her accounts as well, with a goal of saving enough to buy a car. So as soon as she started working, she started putting money into her account. We opened a couple term shares on her account as well, where the funds were not as liquid for her to use. She had money in savings, money in a checking, but she got to watch the money grow. And every month to see the dividends that she was earning on leaving her money there definitely pushed her to continue to save financially.
I love that, right? Because that's that instant gratification. They can see each month how much more they've earned on money that's just sitting there, right? You weren't going to do anything with it anyway.
Absolutely.
And now you're getting paid to have it sit there. So I think that's really important. One of the things that's unique about First Source is that our 13-year-olds can have a checking account with a cosigner, and they can have a debit card. Tell me a little bit about this, because other financial institutions don't usually do it at that young of an age.
So they can, and it's great. There are other programs offered. You do see them online as well with debit cards. It's nice, though, that our credit union offers things like that, where the mothers, fathers, parents are still able to look over their children's account, but it gives them a little bit of freedom to use their funds when it comes to things that they want to purchase. But they then can, look at deposits going in, withdrawals coming out. So they're using that debit card. They're seeing the money come out. It then allows them to use their money, but I feel that it also helps them take a second to think, do I really want to spend as much on a specific item? So I think, again, the debit card allows them some financial freedom, but it's all about educating them on using it responsibly as well.
We actually just got one for my son. He was very excited that for his birthday, he was going to be able to do this now. And, we started with a small amount in there, but he understands that if he swipes it or taps his phone with it, that money has to be in the account, or else you're going to get, an NSF fee, right? You have to have the money in your account. It's not a credit card, it's a debit card. And I think that's important too, for them to understand that they have to be cognizant about money. It's not a free for all, right? They have to know what's in their account before they're swiping that card, and they have to replenish it, as needed, or else it's just going to be gone. So I know that there are prepaid debit cards and prepaid credit cards, or the credit card is that revolving line of credit. I think this is a little bit different and maybe a little bit easier for them to grasp at this stage in life.
I think that this makes it real for them, right? They have savings account they're putting their money into. They go to the bank, they deposit the money, and the money sits there. So they're not necessarily seeing it. It's not there for them to spend. Giving them the debit card, it makes it a little more real. Yes, it is your money. You may not want to spend as much when it comes to specific things. It's not the credit card. It's your real money. It's money that they've earned from birthday parties or communions or Christmas, gifts from grandma. It's money that they're working and getting a paycheck for and then spending. So I think it makes it a little more real for them to see when it comes to a debit card as opposed to a credit card or a prepaid card.
And it's nice that you can teach them the old school way with a register, and they can write their funds in and add and subtract and see it that way. Probably helps a little bit with math class as well.
Absolutely.
And, they can also obviously download the app and they can look at it that way, which I know my son is very excited about every day. Mom, can I have the app? Can I have the app? They're all about that piece. That's all he wanted was, can I have the app and can the card go right on my phone? It's interesting at this age. They don't even want that physical card. They just want it in their phone. So not only the importance of youth accounts, but the importance of our youth today and how they want to interact with money, right? Yes. So evolving with that.
It's lovely that they have the app that they can put right on their phone and they can see it real time. They can see those transactions real time coming through on that app. So that is the way of the world right now, and they don't want to physically hold on to the card. They want to be able to tap it or, keep it right there in their Apple Wallet, Google Wallet, accessible.
Let's talk a little bit also about some of our other youth products, teen products. I love the fact that we have a credit card that teens can have at 16 as long as they have an adult who is a co-borrower on that card. Same with an auto loan, right? At 16, they can go ahead and they can get that auto loan for that car if they need it, as long as they have a co-borrower. And just tell me a little bit about what that looks like and how they're starting to understand credit and build good credit that way.
So it's extremely important that they learn from an early age even what credit is, right? They're going to hear about it a lot when they get older, not so much when they're younger. So it's important that they learn from an early age what it is to have credit, what it is to have a credit score, and how to start building that. They're not going to start off with anything. So getting something like a credit card or a secured credit card where they're learning about how that builds their credit by making timely payments, by keeping low balances on their credit cards, and then by having those limits increase to show more capacity on those credit cards. Same with their auto loans. It's the responsibility of making timely payments and watching, the large balance owed dwindle down over time, what it's like, how important it is to make principal payments when you can to pay down that balance so they're not paying as much interest.
That's a huge one that I don't think a lot of people understand or realize. When you're making that monthly payment, part of it's going to the principal, part of it's going to the interest. And if you make that extra payment and you put that on the principal, that's what's going to be driving down the actual cost of the car. So That's a really, really good tip that hopefully people will take that away today.
Yes. And credit cards as well, minimum payments. As long as you're making those, it's not going to negatively affect you. However, if you're able to make more than a minimum payment, or if you're able to pay the card off in full and not pay that interest, you're going to end up saving in the long run.
Absolutely. Absolutely. And then I think it builds good habits, because then that teen is going to turn 18 and they're going to be moved into a regular, adult account versus a youth account. But now they have that knowledge and that practice and the good habits, and they understand when that money comes in, when it goes out, how I have to budget, what I need to do, and they've started to build that good credit. So that's a good piece for them to learn and understand. Tell me why it's a better idea for youth to have their own account versus maybe being right on mom and dad's or a sub-share underneath. What are they missing out on if they do it that way?
Obviously, you can have sub-shares on your accounts. You can have your checking savings, and you can have your special purpose savings that you label as your children's name. You can save money for them. Unfortunately, they're not able to interact when it comes to those sub-shares on your accounts. When it comes to them having their own account, it gives them some financial responsibility. It gives them access to all of the different tools that the credit union offers. The Penny program, like I said, is an amazing program that we offer for our kids. It gets them excited about doing
they're
their
not
own
going to earn those rewards if they're not in that separate account.
If they've got their own account, they're coming in, they're saving money, and they're being rewarded for doing that, which is exciting for them. It keeps them wanting to come back. It keeps them continuing to make those deposits into their account because they're excited. They want that gift card to the movie theater or to go get ice cream, and then they save those as well. So I think that it's all about educating them and allowing them to have that hands-on experience with their own accounts. It's extremely important.
They like that independence too.
Absolutely.
We always say they want to grow up too fast, but in this case, it's nice for them to have that ownership, to have that independence. And really, we talk about it all the time. It's building that confidence, right? We want them to feel confident about money and not be scared about it or worried about it. And to your point, the education, just understand it more. So I'm proud of what we do for our kids and our kids' accounts. And I would encourage parents, wherever their financial institution is, to find out what is available for their kids and open those accounts out ahead of time. I know people who, when they find out that they're expecting, they go ahead and they open the account right then. They don't necessarily have the child's social yet, but they start the process. And the minute that child is born, they start immediately.
They come in and start it for them.
And it makes a difference. Even things sometimes, baby showers and things of that nature, you're getting cash. Go ahead and start to put that in there, to build that up for your child.
It's all about making them comfortable with it, right? We want them to be comfortable coming in. Yes, we're talking about the app. We're talking about the tap to pay when it comes to debit cards. But it's the brick and mortar too, right? We want them walking through our doors. We want them being comfortable with having the conversations.
Asking questions, right? We're real people. We're knowledgeable, right? We can help.
Absolutely. There are no bad questions. Ask away. And we love to answer their questions. We want to keep them excited about saving their money and watching it grow. So we want them to come in and be comfortable with asking the questions. And the earlier on that they start doing that, the more comfortable they're going to be over the long run.
I also like the fact that it is going to give them less anxiety. I know we talked a little bit about confidence, but we don't want kids to be nervous about money. Like we said, it's never too early to learn healthy habits. And I think we talked a little bit about small steps today leading to stronger futures. What's nice about that is as the kid is building that relationship, when it does come time to going to college and needing to afford books, or, hey, I need a small personal loan because I need to furnish this apartment, or whatever that looks like. Now they've built up that trust with their financial institution, which is huge. We're just talking a little while ago about influencers and TikTok, and that not everything is real advice. And, this is where these kids are getting so much of their information today. And so realizing that we're not your old school stuffy banker you might have had back in the day.
Right.
Your community banks, your community credit unions, we're real people. We live here. We understand the environment. We know what you're going through. Most of us have had kids, and we're here to offer that advice and help you. And when you start out and you build up this trust, right, as you go, then when it's time to have to afford those bigger things, you can go into your financial institution. You're going to talk with a real person. You're going to get the answers that you need. I mean, even if it's over a video call, whatever makes these kids happy. I know a lot of times that's how they like to interact. Great, do a video call, but you're going to be talking to a real person who's right here at First Source.
Absolutely. Again, my daughter is now in college, finishing her first year, and she's in the process of getting her first car. And she has had her account with First Source. So she started her account with First Source, had her savings, her checking, her term share, watched her money grow, has used her account responsibly, and has built that relationship. So now she's moving into the next stage where she is looking at taking out a car loan as well. So it's going to continue to help her grow that relationship with the credit union, and teach her, again, more financial responsibility.
Is there one piece of advice that you might want to give a child who's just opening an account, or a parent who hasn't opened an account yet? Anything just that you want to share with them today?
I would say it is never too early, but it's also never too late. So don't let the fear or the anxiety keep you from coming in or picking up the phone and making a phone call. Ask the questions. We do this every single day. We love our members. We love you coming in and having the conversations face to face. But if you're not comfortable with doing that, give us a call and ask us whatever it is that you are curious about. And we would love to walk you through the process of getting you into the branches, opening the accounts, and helping you start safe.
Great. And now you can even chat, right? You can chat, you can video call, there's so many options. So good. If parents do want to get started, they can just head right over to fsource.org, and all the information is available on our website. And thank you so much, Amanda, for joining us and sharing all your knowledge about youth accounts. We appreciate it.
Thank you for having me.